That's the take with regard to some of the buzzers in trade at this hour. Let me also bring on board Devarsh Vakil. He is with us of HDFC Securities. Shivangi, of course, continues to be with us. Devarsh, I wonder if any of these insurance companies, let me start with that, start making it to the list. Growth is strong. Stock moves have been sideways for multiple years now. What next? What's keeping this entire sector under pressure in your view, and does it turn around?
So, if you recollect, the move earlier was quite aggressive. Valuation had built in a lot of growth, which hasn't come through. But I think, as you mentioned, these stocks have now started appearing on our screener in a valuation which is quite attractive. In fact, our company has come out with recently on 1st of August some of the stocks like Niva Bupa, LIC and SBI Life with a buy rating ICICI Lombard. So there are some stocks which are now appearing quite attractive, where we see about 20 to 25% kind of upside depending upon the different stocks available in these individual stocks. So as you mentioned, after quite a bit of underperformance, they are now looking attractive.
And Shivangi, how are some of these looking on charts to you?
So overall theme continues to be of these are internationally dollar denominated metals. So obviously we as the dollar weakens, there is a room for them to perform, but we had gone quite aggressively long on them or bullish on them around last November or so. From those levels, they have certainly run up, and now companies like non-ferrous company Hindustan Copper, where we have OFS or National Aluminium, are trading much beyond our intended targets. So though the international prices are strong and they are likely to come through for their earnings, we will wait for better entry points for non-ferrous side. The steel or the ferrous is looking interesting, but currently I don't have any stocks under coverage, so I won't be able to speak. But they are looking attractive. We are looking to attractively add coverage there.
Okay, so that's the take. Just quickly looking through some names, and Hindustan Copper really stands out, 7% lower on this one. Opportunity both tactical, but even from a medium to long term perspective.
Tactical, yes, there is an opportunity, as my colleague mentioned, because of technical factors. Stock has corrected. The fundamental valuation, I'll be more comfortable around 330, 340 kind of. 420, 430 kind of levels. From there it has run up. Right now it's 530 or so. So valuation doesn't give me that much comfort here, and that's why for a longer term investors I would wait out because we had started coverage in November 25. From there, those levels it has run up a lot. So I wait for dip to go for a longer term investments. Metals across the board have done really well. I think we should wait for better levels before initiating long-term investments.
Just probably wait for dips. I think that's Devarsh's call. But Shivangi,
Lenskart, so some institutional selling, and if you look at the buyers, it's mainly long-only funds which are buying Lenskart there. Devarsh, so what's your view on Lenskart?
So there is a massive unorganized to organized shift which they are trying to penetrate, and their vertical integration margins are superior. So obviously there is a case for investments and omni-channel model they have. So there is a case for investments, but as your colleague pointed out, in the last 9 months it has run up a lot, and now it is not under the margin of safety which we usually eye for while investing. So we'll wait for a dip or better opportunities. On e-commerce side or app-based companies, we do have buy currently on stocks like Swiggy, where we see quite a bit of upside, more than 50% upside over the next couple of years. So if somebody is looking to invest in app-based companies or e-commerce platforms, I think they can have a look at Swiggy at this point of time.
We're just a few minutes away from closing auction trade, which is coming in, and we're seeing a good amount of some bit of put writing coming in as well. So that's giving some support to the new
OEM approvals from the likes of Rolls-Royce and Siemens. So big news coming in for Sigma Advanced System, as it has received a 1600 crore rupees order from Rolls-Royce through UK and is built on the 3800 crore rupees deal it recently concluded.
Okay, thank you so much for that, Avi. Devarsh, I wonder how you're playing the defense theme.
So we are quite positive on defense theme. We had covered many of the stocks, especially on the shipyard side, where we see a lot of growth ahead. On the defense electronic side also, we have few stocks under coverage. We like as companies like Paras is there, Apollo is there under our coverage, BEL and HL are there, where we have substantial upside left. So certain shipyards like Cochin, GRSC and BEL, HL, these are the companies under our coverage and we continue to favor them. It's a multi-year theme. Government policy support is there. And the way geopolitics are panning out, I think the next few years we'll continue to see theme towards indigenization, government support will be there. So obviously we continue to like them and long-term investors should continue to hold them.
Fertilizers as a pack, does anything change? Fertilizers, chemicals, is there something which is standing out? Could you give us an idea or two from there?
So we don't have any fertilizer stocks under coverage, but
okay.
The theme is there that many of the companies are trying to increase margin by looking at nano, urea, other nutrients, and government supports to increase the domestic production. So right now, today we have some geopolitical development, that's why these stocks are up, but longer term I think it makes sense as the monsoon are lesser, we will see a lot of consumption and increase in requirement for these agri inputs. So it makes sense to keep them on radar.
Also, TCS has signed a 5-year strategic deal worth 1.25 billion euros with Porsche alongside TCS.
So we have a buy rating. Around April we turned from underweight to equal weight in IT companies and started recommending them as a part of the coverage. The second tier or the mid-cap IT companies, there we have more percentage upside. But when you look at the global comparables and see their valuation and valuation of our large IT companies, I think the worst seems to be behind them and they will be able to give good growth from here. The kind of deal which we saw on TCS gives them the earnings visibility also, which was earlier thought that will not be there. The IT companies have the balance sheet, they have the financial resources to go out and look at such deals where they can get the growth back into the Indian outsourcing industry. So I think one should now, if you don't have IT stocks under your portfolio, you should add them. Smaller stocks like Emphasis, Giant, there we have more percentage upside left. So, depending upon your risk capacity, you should look at larger or smaller IT companies.
We're seeing spikes coming into some of the IT companies, starting off with Infosys, where in the cash closing auction, it's up nearly 2.8%, followed by Tech Mahindra, where we have seen a jump of 1%. You have Wipro up 0.6%. You have HCL Tech up 0.59% in the cash session. So a lot of spikes coming into the IT companies during the closing auction session. And well is the hospital stocks, Max and Apollo, and now even today Manipal Hospital is crossing the 1 lakh crore market cap. How do you look at these stocks?
Yeah, so I'll speak about hospital stocks in a minute. I just wanted to also talk about the Nifty. I think for last 3-4 months, Nifty or the markets have been stuck here in this range. In fact, around Independence Day also we got a lot of news that the markets have been stuck around this 24,000 level. If I think these are the signs where we think we are finally ready to break out. The earnings season, which is not much discussed, we have seen a robust growth, around 14-15% growth in the earnings, and next year projections are also very high. Depending upon the, if you look at the oil marketing company or not, we are looking at 14-15% growth. So today we are seeing some spike in the closing session. I think these are the signs for things to come. Post this geopolitical uncertainty, we are ready to break out of this range and moving towards higher levels. So viewers, investors who are looking to deploy capital, I think this is a very good time to deploy. And banking and finance is the area where we feel that maximum exposure should be there. Now, talking about the hospitals, they obviously they have a secular growth story, but current valuations are quite steep. Except one HCV, I think most of these hospitals are doing capacity expansion. That means over the next 1 year, when the new beds come into the market, there will be a lot of pressure on margins. And I think these valuations, what they are currently discounting is higher margins. So we are a little cautious on hospital stocks as of now. NH and others which have some upside room on the valuation front. But overall, as a sector, we are cautious on the
Okay. All right. We're starting to wrap down, at least for the cash market today. There's obviously some bit of movement in the last 14 odd minutes since the reference price has come to us. And IT is one of those bigger movers, within the larger, a pool of movers since 315, and that's now how we look at things. Tata Steel has been a percent cool off from the highs of the day, so you're seeing some bit of a correction as well at play, some choppiness visible. In terms of some of the bigger movers
happening in Vodafone, company able to raise debt, start its capex.
Was it for me?
Yeah, they was for you.
Yeah, so government is supporting the company. They do not want the industry to remain just two player. The overall ARPUs are headed higher. We had covered Idea. Bharti is also we have been recommending from time to time as a overall. Though we may be a little underweight from the index, the overall as a sector, telecom can continue to perform based on increase in ARPUs and increase in the usage. So investors can look at this sector for longer.
Okay. Just trying to get a sense.
Coupled with hopefully a move which comes back into the likes of Bank Nifty, financial services, real estate index, some bit of short covering into the IT stocks, I think could probably be the icing on the cake.
Devarsh, what's your take for the index? Do you have a short term and a medium term target for the index?
No, we don't have a specific target for index, but I'm actually quite bullish on the markets. Given the earnings which we saw, I was just mentioning as we have seen very healthy earnings growth this time. If we just remove the OMC companies, then the companies under our coverage have seen around 18% kind of a growth. Our projection is that for FY27 earnings will be 14% higher, for FY28 15% higher. And this current uncertain geopolitical environment and crude volatility will eventually subside. So at current around 19 times earnings, and if we see the 10-year average, we have been trading around 20.5 times earnings. So there is room for at least 10 to 15% upside in the Nifty over the next 1 year. And as I just mentioned, we have been stuck in this range for last 3-4 months and around 24,000 mark. So index finally seems ready to break out, and on back of financials and some recovery in IT valuations, we should head higher from here.
Okay, all right. We've settled in at 24,330, which is certainly looking good from a technical standpoint, from what Kunal has said. Devarsh, thank you so much for joining us, giving us that perspective. Kunal, we'll let you go as well. On that note, thanks so much for your perspective as well. And viewers, completely timed out on this edition of Closing Trades from Sajid, myself.